Hello students, welcome back to the online classes of IFRS for second year MCom students. Today let us discuss about IASB, that is International Accounting Standard Board. IASB or International Accounting Standard Board is a London based autonomous body. So this is an autonomous body that came into existence in 2001. The aim of IASB is to develop international financial reporting standard. So here IASB replaced the International Accounting Standard Committee that was previously given the responsibility to establish international accounting standard, that is IAS. So usually in 2010 IASB announced the conceptual framework for financial reporting to provide a basic understanding of accounting practices under IFRS. Currently, the IASB has 14 members. So, in March 2001, the International Accounting Standard Committee Foundation was formed as a not-for-profit corporation incorporated in the state of Delaware, that is in the USA. The IASC Foundation is the parent entity of IASB. On April 2001, the IASB assumed accounting standard setting responsibility from its predecessor body, the IASC. Some of the features of IASB are: first one, the IASC, that is International Accounting Standard Committee Foundation, is an independent organization having two main bodies, the trustees and IASB, as well as a standard advisory council. And one more feature of IASB is the International Accounting Standard Committee Foundation trustee appoint the IASB members. Understood? So, exercise oversight and raise the funds needed, but IASB has sole responsibility for setting accounting standards. So, this is about the history of an IASB. So, this IASB is a London based autonomous body. The reason is to came into existence. The reason for existence is to develop international financial reporting standard. And here IASC Foundation is the parent entity of IASB. And here one more thing is, here IASC Foundation trustee appoint the IASB members. The members of IASB is appointed by IASC. And also exercise oversight and raise the funds needed, but the IASB has the sole responsibility for setting accounting standards. This is about concept of IASB or history of an IASB. Next we will discuss about the objectives of IASB. First one, increasing harmonization of accounting standards and disclosure to meet the needs of the global market. So here harmonization strives to increase comparability between accounting principles by setting limits on alternatives allowed for similar transactions, and harmonization which differs from standardization in that the latter allows no room for alternatives even in cases where economic realities differ. That is the first objective, that is increasing harmonization of accounting standards and disclosure to meet the needs of the global market. And one more objective is providing accounting basis for underdeveloped and newly industries. Providing an accounting basis to the underdeveloped as well as newly industries to follow as the accounting profession emerges in those countries. And one more objective is increasing the compatibility of domestic and international accounting requirements. And also the IASB provides support and cooperation to the European Union and the International Organization of Security Commission. So these are the objectives of IASB. So IASB has some objectives here. IASB provides, which supports and cooperation to the European Union, which supports to the European Union and as well as International Organization Security Commission, and also which provides accounting basis for underdeveloped or newly industries follow as the accounting profession emerges in those countries, and also increase the compatibility of domestic as well as international accounting requirements. These are the objectives of IASB. Next concept is role and functions of IASB. There are several functions of IASB, but most prominent functions of IASB are here. First one, development and creation of global accounting standards. The primary purpose of the IASB is to develop a single set of high quality, understandable and enforcement accounting standard that require high quality, transparent and comparable information in financial statements as well as in the other financial reporting to help users of the financial statements to participate in the world's capital market and to make economic decision. So this is the first role of IASB, that is development and creation of global accounting standard. And second one, enforcement of standards. What is this enforcement of standards? It is one of the most prominent function of IASB. Understood? The IASB committee has the power to enforce the organization to comply with the accounting standard that promotes the use and rigorous applications of those standards. Next one, systematic and in-depth research on enterprise. The function of the Financial Accounting Standard Board does in-depth research on special needs of small and medium-sized enterprise and emerging the economies in fulfilling the objectives of harmonization of an accounting standard. And one more is active convergence of accounting standards. The objectives of IASB is to bring about the convergence of national accounting standards and IAS and IFRS to high quality, understandable and enforcement of accounting standards that require high quality and transparent information in the financial statement. So usually the goal of IASB is to make significant progress by identifying some of areas such as conceptual framework of IFRS, fair value measurement, financial statement presentations, post-employment benefits, revenue recognition, liabilities and equities, lease, financial instrument, intangible assets and lease. So these are the goal of IASB to make significant progress in the accounting standards. Next one, we will discuss about applicability or applicable financial reporting or a framework of applicability. Here, applicable financial reporting framework is a set of rules used as guidelines in the preparation of financial statements, and here the framework is based on the size and nature of business. Understood? So framework is based on size and nature of business and the location and laws and regulations governing the business. So applicable financial reporting framework is a set of rules or a set of principles or guidelines, or these rules as used as guidelines in the preparation of financial statements. So this framework is based on the size and nature or location or laws of regulations governing the business. For instance, the applicable financial reporting framework for businesses located in the USA would be generally accepted accounting principles. You know that, right? So usually in the USA they use GAAP, that is generally accepted accounting principles, while the IFRS framework would be applicable in most of the other countries. Most of the other countries they are using IFRS frameworks. This is the applicability of financial reporting framework. So here the financial reporting framework is the rules or is a set of principles that guidelines in the preparation of financial statement. The objectives of applicable financial reporting framework are as follows. What is the objective of applicable financial reporting framework? First one, providing information to make investment and credit decision. So applicable financial reporting framework main purpose is to provide external financial reporting. So this helps to provide information that is useful to present and proposed investors and creditors along other stakeholders. So these are helpful in making decisions related to investment, credit and similar resource allocation decisions. And next one, provide information for assessing cash flow prospects. So applicable financial reporting framework is poised to meet the objectives of the business. It shall provide information to related stakeholders to access the amounts, timing and uncertainty of cash flows of business along with the outflows. So such information flow helps in accessing an entity's ability to generate net cash inflows and provide returns to investors and creditors. And one more objective is provide information on resources and claims. Applicable financial reporting framework which helps the business in generating information about net cash flows. Understood? So this helps to provide knowledge about the economic resources of the entity and claims applicable to those liabilities. So information about effects of transactions and other events and circumstances is also essential. This is about the applicability or applicable financial reporting framework. I hope this one is understood. In the last class we have discussed about strength of the accounting framework as well as the weakness of the accounting framework. Is it? So in the next class we will see about the need of uniform global financial reporting as well as the difference between GAAP and IFRS already we have discussed, and difference between US GAAP and IFRS. Thank you.